Hi traders, you are all welcome to another weekly Forex forecast on FXless Trading School, which is for 22nd to 26th of March year 2021.
In this week, I'm going to share with you some list of currency pairs I have on my watch list next coming week should in case of trade breakout opportunity. And then if today's your first time view my YouTube channel, do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release additional content of this kind, you're going to be the first to be notified.
Also, remember, trading is a high risk and a high reward investment. Therefore, it's advisable you know what you are doing and then risk smartly.
Here are the list of currency pairs I am watching out for next coming week.
I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the USD paired against the Canadian dollar. I have the USD paired against the Japanese yen. I have the XAU paired against the USD. That's the gold. And then we're going to wrap up our analysis with the Ethereum paired against the USD. So let's dive into the weekly Forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. The last weekly Forex forecast analysis which I gave on this currency pairs is still active. And then for as long price no trade within this range, it signifies no the bulls are still interested in this rally right here. And then not until if we can see a bearish close below this no dynamic support trend line, likewise the key level support of the 1.37938, before we can make a conclusion the bears are gradually taking over this no trend into a bearish no phase. Next week, if the bulls can clear off this no minor key level structure right here, then it suggests the bullish rally right here is in the continuation rally for more bullish aggressive rally. So next week on this currency pairs, focus your attention to the minor key level structure we got right here, likewise the dynamic support of this trend line, likewise the key level support which acts at the price level of the 1.37938. The next currency pairs on our watch list is the euro paired against the USD. We can see this currency right here is gradually turning into a bearish no rally. And then I pointed out in the last weekly Forex forecast which I released, I said for as long price trade at this medium right here, it suggests no the rally right here is still under the influence of the bears, because you can see this was the highest high in this trend right here. Likewise, we got the low high swings right here. And I stated in the last weekly Forex forecast, I said there is high tendency for the bears to make a rejection right here. Alternatively, the rejection can come at this level right here. So for as long price trade within this range right here, it suggests there's a possibility of a more bearish rally to come on these currency pairs. So next week, we still need to figure out a well-defined bearish price action signal bar before we can chart these currency pairs right here. Alternatively, next week, if the bulls should step in whereby they put price upward and then ensure a daily close above this level structure of the 1.19587, they still have to pull up price to clear off this dynamic support trend line right here. And the failure for the bulls to clear off this dynamic structure right here, whereby it's now acting as a new dynamic resistance, then it suggests this would be a medium for another low high swing, and then this could interest more sellers to short these currency pairs downward. So next week on these currency pairs, focus your attention to the key level support we got at the price level of the 1.19587. Likewise, dynamic trend line we got right here. Likewise, the last swing low we got right here. The next currency pairs on our watch list is the USD paired against the Canadian dollar. I haven't been talking about these currency pairs for some period of time due to the fact I can't figure out a well-defined no price action on these currency pairs. But right now we can see a well-defined no narrow bearish wedge on this no currency pairs, and this does support a bullish breakout implication. So next week, as a price action trader, we need to patiently focus our attention on these currency pairs. We can see price is currently retesting the key level resistance which acts at the price level of the 1.25337. So next week, if the bulls can clear off this key level structure right here, they still have to retest this dynamic resistance structure which had been rejecting price. You can see whenever price retests this trend line, we always see a rejection to the downside. So next week, if the bulls can clear off this dynamic trend line right here, they still have to make a retest to validate this dynamic structure right here as a new support in order to anticipate for a more bullish upward rally. And the next key level resistance we got to watch out for is the key level structure which acts at the price level of the 1.27925. I drew this key level structure right from the weekly chart frame. Alternatively, you can have your major swing node level at this structure right here as well. And this is why I always advise trader to treat key level structures as an area of value and not as a holy grail zone. Alternatively, next week, if the bear should step in whereby they put price downward and then clear off this dynamic support trend line right here, I wouldn't be interested to short this currency pairs because there's high tendency for this structure right here to result into a bearish node trap. I'm gonna focus my attention to see if price can offer a bullish breakout, then revalidation before go long on this currency pairs next week. The next currency pairs on our watch list is the USD against the Japanese yen. Right from the narrow bearish wedge we got right here, we can see we got a bullish breakout of this no pattern right here through the formation of an inverse head and shoulder we got right here. You can see the strong bullish aggressive rally to this swing high right here. And what we can see right now on this currency pair is there's a reduction in the bullish momentum right here, which suggests the bulls are gradually getting into a state of exhaustion. And there's a high tendency for price to make a pullback right here. And this is why I always advise traders, do not chase the trend. Instead, look out for price to make a pullback before you go long. So I want to share with you an information based on the weekly chart frame. You're going to figure out properly what I can see on the weekly chart frame. So let's check on the weekly chart frame. Here comes the weekly chart frame of the USD paired against the Japanese yen. We can see price was fluctuating inside the symmetrical triangle right from the 2016. That was a July 2016. So this is a multi-year pattern formation we got right there, and we can see whenever price retests this dynamic trend line, we can see price always find a rejection to the downside, and we can see a retest right now. So there's high tendency next week for price to make a pullback downward. So if you are trying to long this currency pairs, you got to be very, very careful what is price is showing us right now. So that is high tendency for price to make a pullback to the bearish side. As well, I want to share with you what I can figure out based on the monthly chart frame of the USD paired against the Japanese yen. So let's check on the monthly chart frame. Here comes the monthly chart frame of the USD paired against the Japanese yen, and we can see the symmetrical pattern formation. It's very, very visible based on the monthly chart frame, and we can see the month of March is actually making a strong bullish bar right there. So if the month of March can carve a strong bullish bar out of this pattern formation we got right here, then it suggests the bullish rally on this currency pair is gradually coming into a potential multi-year bullish rally. So then there's high tendency for price to make a retest. Remember, you don't take the first breakout. So there's high tendency for price to make a retest next month before this currency pairs could actually return into a bullish aggressive rally. And then if you figure out what we got on the daily chart frame, you're gonna figure out this currency pairs are being on a buy bullish pattern for some weeks right now, and then which I would advise you not to chase this trend, not to buy this currency pairs high. Instead, look out for buy a pullback on this currency pair. So let's summarize our analysis based on the daily chart frame. Here comes the daily chart frame of the USD paired against the Japanese yen. So if you are trying to buy these currency pairs next week, then it's not a good decision. Alternatively, look out for a pullback before you go long on this currency pairs. But to be on the safer side, I'm gonna patiently wait to see what the end of March is gonna carve. Maybe it's gonna be a bullish month. The next market on my watch list is the gold. I haven't been discussing about the gold market for some months right now because I can't figure out a well-defined price action on the market of gold. But right now we can see something very interesting gradually forming up, and then that is the bullish flash we got right here. We can see right from the swing low right here, we got this aggressive bullish rally, and then we got a build up of a bullish flash right now on the gold. And then what I can figure out on the gold last week is price is gradually carving a piercing bar. This is like a formation of a piercing bar, which suggests a bullish sentiment. So next week there's high tendency for the bulls to put price upward to retest this dynamic trend line of this bearish channel right here, which can as well tagged as a bullish flash. So next week, as a price action trader, focus your attention to see if price can ensure a strong bullish close of bar above the key level support, which was support right here, resistance right here. If the bulls can ensure a bullish strong close of bar above this key level structure of the 1764.987, then it suggests a more bullish rally to come on the gold. Alternatively, if the bear should step in next week whereby they pull price more downward and then clear off this key level support right there, I would just have my hands crossed on the gold, because I don't want to short from the low swing right here, because there's high tendency for price to result into a bearish trap right here. So next week I'm gonna focus my attention right here to see maybe the bulls are gonna be successful to break out of this key level structure right here. But based on the long-term investment plan, based on my personal decision on the market of gold, I support more bullish bias on the market of the gold. It's time we wrap up our analysis with the Ethereum paired against the USD. So this is for the crypto lovers. The last weekly Forex forecast which I released, I share my personal decision on the market of Ethereum, and I said I'm still holding on my long position on the Ethereum. So what we got right now, it's a consolidation phase right here, and then we can see price is fluctuating inside a symmetrical triangle, in a bullish rally, and then which does has a higher implication for a bullish breakout. So next week, we gotta focus our attention to the minor swing level we got right here. That is the key level support of the 1727.63. We can see price has already been finding support right here. So next week, a bullish breakout of this dynamic resistance of the Ethereum would suggest bullish interest to aim higher to retest the highest peak of the Ethereum, that is the 2043.12 in its historical record. If price can break out right here, it suggests a more bullish interest to come on Ethereum. Alternatively, next week, if the bear should step in whereby they put price downward, they push out to defend the key level support we got right here, like they defended it right here. I share with you guys how I accumulated at the price of 1450 right here. So if the boost failed to defend this key level support right here, then it suggests the market of the Ethereum is gradually turning into a bearish rally. And then if the boost failed to defend this structure right here, whereby the bears ensure is strong bearish close right here, then this could lead into the collapse of Ethereum in the year 2021. So the bulls have to do what they can to defend this level structure right here and then right here. The reason why I said a bearish close below this key level support of the 1414.83 could lead to the collapse of this crypto coin in the year 2021 is due to the formation I can figure out based on the weekly chart frame. So let's check the weekly chart frame of the Ethereum paired against the USD. So here comes the weekly chart frame of the Ethereum paired against the USD, and then if you are familiar, if you have a better deep understanding of candlestick bar reading, you're gonna figure out the formation we got right there is an inside bar, a bullish inside bar right here. We can see the baby bar is a bullish bar, whereby the mother bar is a long bearish bar. So if price can ensure a strong bearish close below this key level support right there, then it suggests the bullish signal we got right there with the bullish inside bar right there has been invalidated. And then once this is being invalidated, then it's a bad signal for the market of Ethereum. So this is why the bulls have to do what they can to defend this key level support of the 1414.83. That's all, traders, and thank you for watching this weekly Forex forecast from the beginning to the end. I really appreciate your time, and do not forget to like, put a comment down, share this video, subscribe to the YouTube channel, as well hit on the notification bell, so whenever I release additional content of this kind, you're gonna be the first to be notified. Thank you so much, and do have a wonderful weekend ahead. Peace.